We are on to video 2 of 3 on 3/31, last day of March. Okay, we are starting with Fiverr. I think this company is not going to do well because they are scammers. Their metrics are weird and fake totally. I've tried to use them several times from that perspective, and in the end you need a good business model to succeed on Wall Street, and maybe Wall Street sees what I see. So this guy is way off the high, and down here has a lot of technical support, so it's hard to be bearish on it from down here. If somebody wants to go long Fiverr for a rally to 25, this is a good area to start with. So let's say you believe in the company fundamentals. The best way to go long a stock that you're not sure if it's bottom or not is to sell some risk against the support it has, and then collect some money and use that money to buy some upside debit call spreads or so. So it is tradable from that perspective on a daily chart. If it holds its floor, it should be able to make a run for 25 or 26. This is a daily chart, so this is a slow poke comment. Meanwhile, it's in the hands of the sellers. All right. You see, I'm not biased. I have opinions and they're negative, but I found you a bullish trade on a stock that I don't like for the long term. Gilead, sellers at 75, thereabouts, solid buyers below. So the question is, will they lose this guy at 72? Because if they do, they'll end up at 69, head and shoulders sideways, prior support. So I'm going to say 71.8. Not just peak, pop below 72, because there's a backup buyer and a backup buyer versus a seller and a backup bunch of sellers. So I think 76 is harder to break through, but wouldn't it be nice if you can catch a run from here to 76 and then a breakout from 76 to 79? And I don't know what is going on with the fundamentals, so if you know the pharma and you think it's solid, that should be your play. Sell a put spread to hold a call spread to try to take advantage of that. So that's probably a good theory, but you have to know that there's earnings, and the earnings come out in about 25 days, and the earnings are always a coin flip reaction. Gold is in a breakout. I don't particularly have any bearish positions in my account. I'm going to have to revisit. I think I sent out a credit call spread that started out right, and that might be under fire now. So if you have any questions about that, reach out in specifics. I will revisit that. Let's zoom out. So gold is rallying. Wow, it had a good Friday. See what I did there? Good Friday. Or Thursday, I should say. That's a pretty good pop there with conviction. So the dollar, did the dollar fall? No. Very interesting. Okay, so we'll have to check into gold and see what's going on, and if we need to defend the position. So if I have a bear call spread that's coming under fire and it hits the sold delta under fire, I would move it to the right if I have to, if I'm running out of time. Close it for partial loss, because it does happen, or roll it up and out to buy me some more time and distance. If you need more information, reach out. GOGL. This stock has been leading even intraday. It shows some strength when the market is weakening, and if you stay with the market, you make money. In other words, it's kind of telling us where to go. And right now, it's confused. This is a daily chart on Google. A quick lesson on charting. All these sticks are indecision, because they come there, and by the end of the day, they hate it, and they come off of it. Even on this day, that's probably the Apple news. Oh, Apple's going to buy AI from us, 6%. So that spike put in a big seller right there. So 152, 153 is going to be difficult to come out. Luckily, they have strong buyers. Look at all these sticks. So we have sticks fighting sticks. Decision coming soon. So it's either at 158 or at 144. Thanks a lot, Nick. Hey, I'm telling it as it is. This is a more in-depth look at it with the comment about Gemini. That's the news from Gemini and Apple. And then you have a seller from last week and a seller from a few weeks ago at 154.3 and a bunch of buyers. Solid support, solid resistance. Which one's going to win it out, right? So that's the battle. Goldman Sachs, I don't have a trade in Goldman Sachs, but I am short JP Morgan and losing. And this banking rally is beyond logic, because their P&Ls are pretty boring. Goldman Sachs is kind of like a not bank. They do all this stuff where they can profit off of their own words. So you can tell they had a big sales year last year. And let's see, what was it? Total revenue 108.7, and now they have a plateaued sales line to a degree. So I'm not sure what happened last year. I mean, we can pull it up financially, but I don't need to. You can trade the charts. I'm going to do it anyway. I'm going to go to annual. The trailing 12 months is even bigger than last year. So this would not be the bank I would short based on fundamentals. It's in a breakout and going into a massive prior fail. This is a weekly chart. So if I go to a monthly, it's even simpler. So this is a monthly chart. Every candle is a full month. So this one is closed. They opened here, they had a little moment, they're closing at the top. And this is the highest monthly close ever for Goldman, right? So here's what happened. 1 month, 2, 3, 4 months fighting here with higher highs, and then they failed. Any prior fail like this is reasons to break out, but remember that this is 6 months. That's 4 and these 2. This battle lasted 6 months. So I wouldn't hold call just because it broke away the other year back then. All right, so it is in what period of time is this one? Was that 08? No, not even. Oh, 2021, the pandemic. Oh my gosh. Dang. So the valuation must be through the roof. Yeah, you can't argue with such exuberance, but as an investor, there's no way on earth you can convince me to go long the stock up here. I would wait for a dip. Where? Under 400. You're going to wait 10 years, Nick. I will. My job is to protect my assets. All right, HIMS. Whoa. Big ramp of sales. That's good. So I guess you can explain it. Valuation, I don't really know how to value the company. The insides of the particulars of the company, but I can make global statements. For example, we can tell it's 4 times sales. It's the most expensive here, but it's not outrageous as a number. It's lower than Apple, and it grows and Apple doesn't, right? So from that perspective, it's not expensive. Revenues, we know that. Let's see, overview here. Cost of goods sold is pretty good. It means it doesn't cost them much to sell the stuff for the ingredients of whatever they're selling, like the cost of goods. But operational, they eat up all of it. So some goods and some bads here. Cash flow positive. So I wouldn't short it. I mean, it could grow into a better company. It's a decent little business, but this here is not an obvious point of entry. Maybe closer to 14 or 13. For me, I wouldn't consider it until it falls below 12 as an investment. But you can nibble to get started and get the itch out. Honeywell, global company, clearly solid P&L, boring at best. So the stock should be boring. Let's see. It's not boring. What's wrong with these swings like that? Like it's going out of business. Okay, so looking at it from a daily perspective, this here is not an obvious point of entry because every time it's gone here, it has failed miserably going back years. So it just makes it not an obvious point of entry. A dip below 200 is definitely a point of entry because, or at least a starting point of entry, because it's the middle of the range, it's the highest point of volume going back years, and it has a lot of buyers below. So solid support, trying to break out. If I'm long, I'm not leaving the stock. But if I'm starting longs, I don't know if I would want to start right there. Maybe a little bit lower. But a starter position, you can do that. Okay, so anybody that's now getting involved in Bitcoin should know that they're going to get cheaper entries. It's a guarantee. This is Bitcoin we're talking about. I still have a core position in crypto, so I haven't exited, but I definitely booked the bulk of my profit. I can book one more time out of my core position with that and keep a core position. After that, I would say, okay, I'm out. This here is not an entry point for crypto from a trader's perspective. But if I'm a newly starting investor in Bitcoin, and then the nibble starts. Like, have an accumulating concept. Like, every month I'll buy 200, 100, 1,000. It depends on your budget, and build it over time. It'll be fine. IWM, I will have a whole segment on that. We already covered it in the beginning. Segment will be in the video tonight. It's not rocket science. KHC, this here is not an obvious entry point. Look at it. So if they don't take out 37.40, I think they'll go to 35.40 first. So that's the way it's lining up. A lot of sellers above, and if they don't go up to that range, I think, let's see here, this is doable if they don't go above here. They need to be inside this area. KLAC, is it called 10 core still? No. All right, you have a buyer down at 669, 668, and a seller above 720. I think it's easier to test the floor than it is the ceiling. So I think you can dip and test the support. And if you lose that support, you're going to end up down here. I don't see a reason to lose the support. This should be a solid company. Look at this P&L. It's almost fake. Every year it grows and our earnings grow with it. Lam Research, probably same kind of P&L. A little less growth. Solid support. Nothing changed here. Everything I said last time. So this was the forecast, the red one. Last time we weren't that far. We were just a little bit too high. So we can delete it for visual noise. What am I saying? The ascending channel is not as egregious, but it's still there. Lower, higher. So here's how the bulls can stay in charge. Take out the high to make a higher high. So you can say, I'm making higher lows and higher highs. You need to do this before you make a lower low, significant lower low. Like if you lose 910 before taking out 1010, you might end up at 840, if not 820. So that letter S is support, but they better hold it. All right. LULU, it's a good nibble for a long. Be careful if they lose support, then we will have a conversation. That's pretty hideous. I don't see that happening. It's a decent P&L. So this is a buy the dip moment for somebody that wants to start a position. If I'm long up here, I'm not adding down here. Personal preference. But if I wanted to start longs here, I could. It's hard to find good premiums to sell. But I would sell a put to own shares, or I would sell a put spread to be long. I don't know if I would buy a debit call spread. I don't know what that is. I don't think I've ever seen this company before. Okay. All right. So the bearish scenario played out. Target 1 met. Target 2 is 102. They might have a bounce towards 106 before they go to 102, but they might be headed lower. Mara, if you're trading it because of crypto, Bitcoin prices, please trade Bitcoin. You can trade IBIT, you can trade Bitcoin itself. Don't trade companies to trade Bitcoin. I don't know anything about Mara, how it makes its money. It's not a P&L thing. If they accumulate Bitcoin, it's a balance sheet thing. This is still standing in your way correctly identified. So if Mara can take out 25.3, it can go to 30. Okay, so you have support below and resistance on the highs from Friday. Let's see if they can take out the highs from Friday. They can push through. But if you're investing in Mara, oh wait, that's Mara. It's not a Bitcoin company. That is ad sales. No, it is. It is. I keep mistaking it for the other company, DigitalOcean. Okay. What I said holds. Technically, you have an opportunity from the high that they failed at on Friday. You also have support. Now, if you lose 17, you're going to 12 and 11, if not single digits. So you have two extreme scenarios, and you're ping-ponging between the triggers of both of them. Mongo, I could have started a long on the dip, and it gave us several opportunities. I mean, the P&L looks pretty good. credit put spreads work. Selling puts to own shares work. Buying a call, I don't know. Buying some shares, okay. If I'm buying a call, I should buy it way out in time, and I should sell covered calls against it. I'm allowed without putting myself at risk. It's like covered calls on shares. It works the same way. If you don't know how that works, reach out. Mondelez, it looks dangerous. It looks like they want to test this circle from before. That arrow from before is coming to fruition here. It looks like they lost 71 and 71.50. And that was the line. It might be drifting lower towards 68 or 67. So I would use rallies to get out of a position. And if I take longs here, you do have immediate support at 69.50. But if you lose that, you're going to go for a trip lower. So it looks easier to short than to go long. So if you're long against this, I get it. But make sure you have a tight stop because it looks easier to slip. 3M fell from point A to point B, and now it's back halfway. Resting point. Now the question, will they take out 102 first or 109? If you take out 109, you're going to 12 or 12.50. If you lose 102, you're going to 98. So if you want to build a box and monitor the action inside the box, trade the box until the edges fail. I would go long inside the lower 1/3 and short and exit the longs or short buy put inside the upper 1/3 until they lose the edge, and then they go in that direction. Microsoft, great company, actually the best company on the planet by scoreboard, and that green line 416 zone should have some short-term support, and if they lose that, they have backup support, and then they're all big. Now here comes the rub. If you lose 402, the trip to 380 could be blindingly fast. And I say if, and that if should have like 4 of them. If. That is like speaking crazy talk right now, because all by itself, there's no way it's going down there. And the market has no intentions of breaking down anytime soon. But if it does, that's the risk downside. So this comment is to get people not to add to positions they have up there. If I'm profiting from 350 and I have a lot of money in profits, I would be busy selling covered calls against my shares or calls. I'd be busy scalping some, but leave a core position. This here is not an obvious entry point from an investment perspective for the long term. I am confident I'll be able to buy Microsoft shares lower. You do have support on the green line and backup support at around 408, 409, and even backup support at 402, 400, and 398. So you have support everywhere and a small line to beat to make another all-time high. So the bulls are in charge. But my comment about the trip down to 380 is if all the supports fail, the trip to 380 is super fast, is what I'm saying. So I would not add anywhere above 400 to a current position. Matterport. Rallying into a prior, it has the opposite scenario of Microsoft. Microsoft has incredible support. This one has incredible resistance until you break 255, and then that becomes a catalyst. MTM, don't know what that is. Momentum Factor ETF. Why do you guys bother with these ETFs? Okay, I don't know what to do with this. It's so choppy. The bulls are in charge. Figure out what's inside of it. Tell me what companies. I don't have time to go flip. If you breach that 190, then you're going to 193. Otherwise, you're buying dips. So not much to say. If you're asking me as an investment, I don't know what to say. Except look left and you decide if it's worth your risk. Ask this person what happened to them, to their money last time they bought it up here. Micron, I'm short. Okay, so shorted it, made like 40% the first day, and then the very next day some investment house comes out and upgrades it, and it spikes 5 or 8%. I'm staying short. I forgot how much down I am, 25% down on the puts. They have time on the clock. I bought very long dated puts for that reason. I want to see what happens. I'm curious to see. That's a company whose sales fell 40%. No, Nick, they rallied 50%. Yes, quarter over quarter, but I'm looking at an annual perspective. And so yeah, I'm missing a piece of the puzzle. Maybe it's the makeup of the business or something, but I think it's a pretty cheap investment into an idea of short. So I'm looking at prior business per year. Okay, pre-pandemic, 30 billion, 2030. They fluctuate so much in sales. Here's 2030, 23, 21, 28. That's a big swing. I understand the pandemic here, but before the pandemic, there was 20, then 30, then back to 23, and 21, up to 27, 30. They never broke the pre-pandemic highs. And last year, half as much sales, and now they're back to 18, and we're saying, woo, great job. What the hell? Get some consistency in your income revenue stream. So I think it's stretched up here. Statistically, let's go see. Instead of my opinion, this is the price to sales. You can't fake that. That's the stock price relative to the sales per share. So it's now 7 versus... Historically, I don't see anything above 5. And now it's 7. So if you buy shares now, you're giving it 7 years worth of sales today. Well, in NVIDIA, it's 35 or 36, and that's outrageous. But NVIDIA doubled their sales and tripled their net income. In fact, their net income now is bigger than their sales just last year. So not the same thing. And this one is rallying like it's NVIDIA. I think this one's going to fall flat on its face, and I want to be there holding some puts. I could be wrong, but the risk I'm taking is minimal, and I want to see it happen. Okay, so that's my take on it. In other words, if you're asking me about the trade, I haven't done anything with it. If you're asking me about going long the stock, I would not do it. NCLH. Wow, the stock price looks like this one. Shortable from the top last week. If you bought a put or a put spread, just manage your profits. You might end up at 19 with a stop. They can take out the prior high and go flying, but I think that would be wrong fundamentally. Then it would definitely be a short idea, fundamental short. Down here, it's a technical short down to 18.5. Net. So we've gone long this every time it dips. It's a pretty good P&L. This here is not a big enough dip for me. If they lose 90 at some point and they fall down into the low 80s, would be a place I would get started long as an investment. Now swing trade investors that are faster can sell a put spread short term below 90, as long as there's no sales. Earnings report. You have a month. Maybe an iron condor while you wait. There's no obvious entry point. You have sellers and buyers above and below. Netflix, I wouldn't short it. Content is getting better, but it is shortable. I think they want to retest 590, 580. So if you sold a call spread or bought or put, leave runners. That's a long, steep ramp. I've been saying leave it alone because it's hard to forecast. I think Wall Street is in the habit is changing the habit from judging it by number of subscribers, and they're switching to judging it as a business. And I don't think it's a bad business. Yeah, solid management. Nice. I don't know what nice is. Nice chart. Not a nice place to start longs. How many times have I said that today? Well, that's because markets cannot stop rallying and they're testing the limit again. We did this in 2021 and we're doing it again. That's the simple statement. I should have started with that. We're testing limits. And maybe it works, maybe it doesn't. Anyway, if I'm an investor, no way on earth I'm going long on nice against all of these failures above. Buy the dip into 230, whatever that is. Solid P&L. What the heck is a nice? Enterprise software. How come I've never heard of this before? Huh. Okay. Nike. Look at this. It did exactly what we thought it could do, which was this line, right? And it's inside the zone that we thought it could come into. It failed at the resistance we thought it would fail at. So Nike rallies into 98. Repeat this. So rallies into 98 could finish the job. So I'm going to caution you against adding to current long positions. Let's say I bought a call and I'm struggling and Nike rallies and gives me an opportunity to exit, take it. This is a realistic path. A credit put spread could work. A debit call spread could work. Shares for the long term, I would nibble, not full position. This is a good company, but it's in the hands of the sellers. So buying opportunity, yes. Going all in, no. NVIDIA, the opposite statement. Great company, but it's not an obvious long. So I'm going to give you numbers, write them down. 908, give or take. 937 through 940, give or take. Those are super important numbers. If you take 937, you're going to like 975, if I remember from memory. And if you go there, of course, an all-time high is an imminent thing. They're buying dips into a very sharp rising channel. You're looking at it. Dips below 850 could trigger 800 and 780, but you have a lot of support. And I put support in quotes, not solid support because of the ramp. There's a lot of weak hands in the stock. So be careful. Very important stock to watch the next couple of weeks, if not a month. NVMI, almost at target 2. 174 through 172, that's a starting point. Target 3 is 164. I'm not sure it goes there, but that is target 3. Look left, that is a hideous volume profile. You have weakness into 169, and then weakness into 145. Yes, there's no volume support. I can't tell you how important that is. And the faster you rally, the weaker it is the structure of support below you, the faster you fall. NXE, sellers above, buyers below. That's all I can say about it. Solid buyers at 7.3. So manage your risk accordingly. All right. ONON. I just saw some ONONs on Target. Not Target. Costco. Is that the top? So I don't know. Usually Costco's tennis shoes are like $19 to $25. I thought ONONs were $150. Well, at least the ones I bought were $175. Okay. 37. You take 37 out. There's nothing above that. You can go wherever you want. They're busting through the resistance. They bought the support. Look at that. We had R, they failed. We had S, they bounced hard. And now they cracked through the R. So as long as they're above 33.5, they have the opportunity to go to 39. Those are my comments. In fact, look at this right here. Look at how it was the base almost to the dollar from back here. All right, so I'm going to leave it back there. Solid though, right? So we can say, okay, check this out. Not to be confused with on too. This stock never breaks out anymore. On never breaks out. It is breaking out. It's just taking it a few months to do. Okay, on two. What is this? It has no sales. Yeah, I don't know what this is. You have sellers up here and buyers down here. Oh, there we go. 200 million. Okay, P&L. Just if you're an investor, you need to do homework on the company prospects. You do have a short-term seller at 188 and a short-term buyer at several levels, 177 and through 170. Ping pong inside that zone. PCG. Pacific Gas and Electric. Is that a Northern California thing? Oakland. Yeah, this is the Northern. Aren't they broke? Didn't they burn down the city or state or something? Lawsuits and such. Wow. Somebody's trading this? Okay. I don't know what to say. Okay, technically, if you don't go above 17.3, you're stuck. that's a pretty strong resistance zone. I don't know what else to tell you. Yeah, strong support, but if you lose 16, you might go for a ride down to 15. I don't know what we're doing with this. All right, video 3. 3 coming up.